let's start with crypto, and we have an interesting guest lineup. We have Naimish Sanghvi, CEO CoinCrunch India, and Gaurav Dahake, founder and CEO of BITBNS on the same. Welcome to the show, guys, and let's talk about the rebound, hopes and optimism. Naimish, what do you assess right now, the kind of crackdown we are seeing in Bitcoin especially and in rest of the cryptocurrencies? What is your analysis looking like?
Brilliant question, Kavita. And I have a little bit of an unorthodox approach towards judging the market. It is when everybody is talking to you about cryptocurrencies, you probably know that it's the top. And when everyone is talking about it crashing and hoping that it'll crash more, that's when you know that maybe the reversal is happening now. So if you go to Twitter now, everybody's hoping Bitcoin will crash to 10,000, 12,000, maybe even, as a joke to 3,000 or 5,000. But you know that Bitcoin now, as we record this, we know that Bitcoin has bounced back from its 18,000, dump. So we know that might have been bottom. And I think I would agree with that analogy that that 18,000 might have been the end of it. And from here on, we might see a slow climb back up. Because everybody capitulated as much as they would have had to.
Gaurav, what are you sensing like? Do you agree with Naimish on the rebound? Because some people who really put money in crypto have told me that they have seen levels of $3,000 also. So they are really not worried about this crash, and they are really optimistic on seeing the higher levels than the highest level that's been achieved already.
Right. So thanks for inviting me over. What I would say is typically whenever a bottom sort of comes in, it stays there for a while. So we might have seen a quick rebound, but if a bottom has to form, it takes sort of some time, and it's not a falling knife sort of a thing where you just immediately sort of crash to a very low level and it immediately reverses back. That happened with COVID specifically, with the sort of rally and the amount of money flow that was sort of coming in. What we need to also understand is the money flow is getting reduced with quantitative tightening that is happening. And that might have longer term gradual impact on the market. So if a bottom has to form, it would take some time. But I think we're at the levels where it makes most sense to start sort of investing and kind of doubling down on sort of investments like Bitcoin, because if they go downwards, so if equities crash 30%, Bitcoin might have crashed 75%. But when it goes back up, it's the same sort of a story. So if equities would go up by 20 or 30%, Bitcoin would go up by 75, 100% or more. So it makes sense to sort of start having some small allocation towards Bitcoin and systematically having SIP and other investments into Bitcoin.
Gaurav, a quick volume check. How has it turned out so far?
So in terms of volumes, the volumes have sort of grown with the volatility that we sort of saw last week. Regulatory wise, what we have seen, people are a bit anxious with respect to the government stance, and they're waiting for the TDS implementation that would happen from July 1. But the last 1 week, the volumes had sort of shot up. A lot of activity started happening. And we are seeing some inflow of newer users as well who want to sort of take advantage and sort of buy the dip at this point in time.
Naimish, tell me right now, can we, looking at the crash that crypto is seeing or Bitcoin is experiencing, do you think we can have a strategy wherein other asset classes we buy on dips and have a longer horizon view related to any goal? Do you think this is the time we can adopt the same kind of strategy even in crypto or Bitcoin?
Okay, I think that it's absolutely a good time. I agree with Gaurav that, the bottom sort of remains there for a while, but it seems like we've hit that. So, we won't see a lot of volatility downwards, but we may see, whenever the markets correct and there is an upward momentum in global markets, in any other asset, as you said, we might see a higher, momentum towards upwards in crypto. So that way, investing at dip levels, or as we say, buy the dip, usually turns out to be a good bet in terms of achieving goals faster and making money faster. Obviously, you have to assess your risk. That's a given, right? You should not invest more money than you can sort of afford to, that should not make you lose your sleep, if I may, right? You should invest only the money that can let you be comfortable in life. But the upside is usually always, and it has always been higher against any other market when it comes to crypto. So this seems like a very good opportunity again, but be careful out there. Do not, like, just because I said it or Gaurav said it or Kavita said it, don't like sell your house and put all the money in crypto, right?
Yeah, I would like to say, like Naimish
Very
was
interesting.
pointing out.
Yeah.
Yeah, so one thumb rule could be out there when people start giving really crazy price targets is when you sort of exit or enter the market. So when Bitcoin was going up, everyone was saying it would go to 100k USD and 150k USD, 400k. Like there were crazy price targets that were out there, and that probably becomes a time where you probably start taking money out of the market, exit it a bit. Versus at the same point in time when people are giving the opposite of it, where they're giving 5k, 8k, an arbitrary price target. This probably is the time when you start getting into the market and start sort of taking a longer term spot position.
So, Gaurav, do you also think that looking at the crash and the scenario where we are right now, crypto as an asset class, if I can call it that, will see more serious investors participating, because it's such a place where people come for short term and they make money and then they get their targets reached. But then, do you think this phase is also trying to get us new type of investors or new type of money makers for crypto?
Right. So what we've typically seen in crypto is people who take larger exposure for automatically become longer term holders. So Naimish is an example. I'm an example. So we started investing into crypto, and we saw the bear market. So a lot of us learn from mistakes. Hey, our investments are down 50%, and then we start figuring out what is to be sort of done. And when we sort of see the upside as well, that's when we realize this is a very interesting asset class. There's a lot of volatility that is out there, and the upside remains significantly larger. And some of the parallels that it kind of gets compared to, for example, it gets compared to sort of dot-com bubble, like crypto is crashing similar to that. But if you sort of see what sort of happened post the dot-com bubble, things eventually sort of regained back, and they eventually become significantly larger, right? Crypto, of course, gets undue attention on both sides of the spectrum. So if things are going good, there is undue attention around NFTs, around meme coins, around different facets of crypto. And if things are going down, it is directly like Bitcoin is dead or crypto is like no longer going to exist. So both of these are slightly overstretched on both sides of the spectrum. And when you start seeing that sort of articles, right, where Bitcoin is dead or those sort of, that again is an indicator, probably you start taking exposure into crypto.
Naimish, do you see people putting money in anything else other than Bitcoin also?
I think a lot of people are putting a lot of money in, metaverse projects. So it could be NFTs, it could be tokens that support these decentralized gaming initiatives, right? So Bitcoin, okay, I'll be honest, Bitcoin has become like a blue chip stock in the crypto market. So people investing in Bitcoin are not expecting huge upsides, right? It can be 100%, maybe 200%. But investing in newer tokens are essentially you're taking a bet in startups, very early on, and you're expecting a 10x or a 100x return on it. And that's the reason why even retail investors or institutional investors are taking their bets on these metaverse and NFT startups, gaming startups, over just an infrastructure project or just a blockchain project like Bitcoin or Ethereum or something like that, right? So for someone who's getting into crypto for the first time, Bitcoin is the perfect bet for you. But once you are accustomed to it, I'm sure that you will move on to sort of these risky investments, because that's what you're looking at. You're looking at, like, making money quick, right? Whether it's right or wrong, it's not for me to say, but that's how the trend has been.
All right, but Gaurav, do you think this is the right time to experiment towards other tokens also? What will be your word of caution in that case?
Right. So if you're a first-time investor, start with Bitcoin, Ethereum. You can systematically invest into some of these assets. Once you start understanding the market, you should definitely explore the other sort of tokens that are out there. But keep that portfolio allocation less than 10-15% of your portfolio, right? Because if they are going to have huge upside potential, they'll still become a larger portion of the portfolio. So if a token that is 5% of your portfolio goes 10x or 100x from there, that is going to be a significantly large portion of the portfolio. And even if it goes down, it is the limited risk that you've sort of taken, which is 5% of your portfolio. So I would sort of say limited to a certain sort of degree. Crypto definitely has some sort of groundbreaking potential that is out there, and we'll see a lot of it getting manifested. For example, my central sort of thesis is crypto would fundamentally change how we think about our data. And crypto has, to a certain degree, tried giving us back control of our own money. It would probably start giving us control back of our own data, where most of our data is siloed in between platforms like Facebook, Google, and others. People can sort of take control of their data and figure out how that can be monetized, or what sort of ads or anything that could be sort of would be happening from there. So we'll see some of these things happening. And if you see things that are happening in crypto in some of these sort of directions, privacy is one end of the spectrum. Data is one, and governance is one end of the spectrum. And if you see interesting opportunities that are coming up in that, definitely something that you can explore.
Naimish, what will be your word of caution?
It's very simple. I think it's more aligned to what Gaurav said. If you are going to expose yourself to high risk assets or investments, you should not be putting more money than very tiny sliver of your portfolio. So if you have 100% investment portfolio, you have to diversify. You have to put it in safe assets. You have to put it in stocks, mutual fund, and in within crypto also it has to go into Bitcoin, Ethereum, some sort of established coins, right, or tokens. And a very small percentage of it should go into high risk assets, because those bets can go either way very quickly, and it should not wipe you out if it goes in the opposite direction. So it's always better to invest very small amounts in very high risk assets or coins in cryptocurrency. That's my word of caution as well.
All right, so interesting word of caution from both our experts, and this actually ends our crypto corner. Thank you so much, Naimish and Gaurav, for removing time and participating in this discussion.